Punita Kumar Sinha joins us, managing partner with the Pacific Paradigm Advisors. Punita, good morning. Thank you for joining us. Let me give you options.
Morning.
What do you want to start with? You want to start with global news? You want to start with local news, local cues, or you want to start with budget expectations?
Well, we can start with the global news.
Are you a bit surprised with the strength global markets have reported and registered of late? Dow is at a fresh 5-year high. S&P is also sitting at a fresh 5-year high, and Nasdaq is at a fresh 12-year high.
Well, not totally surprising, because I think, if you look at fixed income in the US has had significant outperformance over the last 3 and 5 years over equities. So now, the concern is that the rate cycle might turn in the developed markets, particularly in the US. So, maybe the outperformance of fixed income is sort of behind us, and therefore money should flow back into equities because rates are so low. So I think that's one of the reasons that could be a trigger for equities to outperform fixed income, and therefore, depending on valuations and other macro news, equities is definitely attracting interest because of that reason, according to me.
Punita, what explains though the passiveness that the Indian equities are showcasing ahead of the budget?
Well, it's quite, if you look at historically, typically Indian markets either, correct pre-budget or post-budget. And we are seeing some of the correction right now, but I wouldn't be so concerned, because I think the finance ministry is very keen to have very buoyant capital markets, because they have a very aggressive divestment target. They have to manage the fiscal deficit. So any correction right now is probably, hopefully, post-budget will sort of reverse. But of course, there is always a risk that the budget may disappoint, although my sense is that given the way the finance ministry and others in the government have been aggressively pushing ahead on reforms, that reform initiatives hopefully will continue to generally be, creating a feel-good factor.
Punita, many experts are of the view that this year's budget is more like a no event. It will be more like a 100-point Nifty event, because much of the budget upside is already baked in. We pretty much know the budget arithmetic, and the fact that Finance Minister has again and again alluded to the fact that he will present a responsible budget, markets pretty much know the tone of the budget also.
I think it's probably wrong just to focus on the budget to be a driver for equity markets for this year. As I said, I think to you a couple of months ago, valuations of Indian markets are now sort of in the middle of the range of their own history. They're not that cheap anymore. So the focus really has to be on earnings growth and whether the